So we're gonna get started. Um, we're gonna get started.
Yes, sir. What's up, brother?
Feeling
Doing great, man. What about you?
solid. I'm solid. I'm excited. Today, it's not gonna be a whole lot of charts. It's gonna be mostly mindset and then some things to do. We'll look at the charts just when we're looking at things to do when we're red, when we're blue. Close this door really quick. But let's get into it. We're gonna get into it. This is gonna be really good. We are recording this. I'm recording this especially for us too, not necessarily to drop in the chat. And then let's just see our progress after these 14 days. All right.
Sounds great, man.
Cool. So first, what I wanted to go over, and I guess it is important for me to share my screen on this, but it's going to be the phases of trading. Phases of trading. We're going to go over it relatively quickly, but we got to be in kind of detail. And the only reason I say I'm going to share my screen is we got to get into that compound daily interest calculator for this. But in the phases of trading, the first phase that everybody's got to go through, and you got to make sure you get to it as well, is going to be excitement. Phase one, and if you are taking notes, I would just say write that down. One is excitement. And the thing about excitement is that's where it really kicks off you getting on this journey of really us getting on this journey of really getting, mastering trading. And a part of this excitement phase is going to be looking at what we can really do with this skill, right? Because this is a skill set of decision making. However, with this skill set of decision making, there does come alongside some money making, right? And it is important, of course, I should have started out saying this, to recognize that we're not trading to make money. We're trading to make decisions. Trading is just a skill set that we learn, that you pass down. It's not necessarily about making money, but it's about making decisions. And the compound result from making the right decision time after time is going to be compounding your account. It will be a massive accumulation of wealth, because you're not just, because how you do one thing is how you do everything. And training yourself on the charts is training yourself in real life. You notice people who start to get good on the charts are often starting to work out. Their workout regimen is good. Their cleanup regimen is good. They're clean people. It just works like that, right? So when we recognize that, let's get back into these phases of trading. Let's talk about the excitement. So you look at the compound daily interest calculator. We're just going to look at $500. We're going to get excited really quick just to see what is it about trading that can be excited, right? So if we just take this 500 and we raise it 5% per day for 90 days, and we don't make any withdrawals, so we reinvest 100%, and we do not trade on the weekends. Starting November 1st, today is November 1st. This is day one of KJ Cash Bootcamp, mindset, proper risk management. That $500 could potentially be $40,000 by March 7th. So we're looking at, by March, 40K, but let's just look at it. 5% will be $25. That's all we would need to make today. I'm currently 60 points up on an SPX trade, which would be $60 on a 0.01 on a SPX trade, right? 26.25 is what we need to make tomorrow. November 4th, $27. It's very simple, putting our accounts here. Now, as we continue to compound, we get 2 months in. We're looking at November now. We're now making $200 a day. That 500 is at $4,000, which is pretty exciting because it's the exact same amount of effort that we had to put in last night. It was actually yesterday, I think, that we was on the call where we was looking at the chart and I was saying, okay, if it comes up to here, I'm thinking it's going to drop. So I got a pending order. I literally told you that. And I just, all day, I just did not enter that trade. I did enter a Bitcoin buy that kind of went a couple hundred pips. But then it's like SPX overnight, boom, snap. It literally tapped the entry and dropped. There was no drawdown on that. If I would have been watching it live, I would have been so excited. And I was asleep, just woke up blue. So this is not hard. It's just pushing a button. It's 5%. The only difference would be the lot size and the amount of times that I did it and the discipline to do it over and over. That's the only difference. The amount is crazy. So $200, 260. Now we're at 5,400. 287. Now we're at 6,000. Continue down the plan. By March, we're at 40,000. But we know we don't hit every trade. We know we hit stop losses. We know sometimes there's risk management. So I always try to cut it in half, right? So instead of 90, let's just come down here to just 45, right? So let's just say we went from 500 to $4,492. by March 7th. So March 7th, right? Oh, March 7th. And I'm gonna have to cut through this kind of quick. 2023. We're gonna do two more examples kind of quick because I want to get to the skill set stuff for this recording. But by March 7th, we got our 4,000. We do another 90 days, 5% per day. We're now looking at $362,640 from 500. This is from November to March, 5% per day. So again, we're at 224. Let's just skip ahead. Now we're in May, coming up on summertime. Let's get it. Summertime party. We broke the $1,000 a day in April, actually. Right on 420. Let's go. Big ass smoke day. Want to buy mad weed because we had $1,000 day. It's easy. Boom. We're at $20,000 in our account. Remember, it's the same effort we put in yesterday when we was looking at the chart. The only difference was the discipline to keep doing it the same way over and over and over, not taking trades when we don't need to. That's all it takes. As we continue to go, when we get to July, we should be making $17,000 a day. We should be at $362,000. But like I said, we take lessons. We take losses. So let's just cut it in half again. Instead of the 90 days, we hit the 45-day mark in 90 days. So we hit 40,000, right? This is by July. 40,000, July, calculate, boom. 1, 2, 3, 4, 5, 6. By November 10th, 1 year from today, we're looking at a potential $3.2 million from that $500. And we cut the plan in half twice. And if we cut it in half one more time from that 3.2 million, go back to 45, we're still looking at $362,000. $362,000 in 1 year, pushing it, but excitement. Phase one is excitement. That's crazy. That's crazy. It's not even crazy because we cut the plan in half twice. It could have really, okay, let's just say we didn't cut the plan in half twice. Just for the sake of really seeing, right? We're just going to do this. Just do this. What's today's date? Because 300,000 is the low end, November 1st, 2022. 300,000 was the low end. Let's just do this. So we got to 40,000 by March 7th. Let's just say we did it. Remember, 300,000 was the low end, 40,000, because I really want to get excited. March, get this out of the screen so I can see, please. March 7th, 2023, we go from 40,000. Damn, 40,000 straight to the 1, 2, 3, 4, 5, 6 to the 3.2 million by July. Let's just say, because at some point we're not going to be taking so many lessons. That same that's happening in our account is going to be happening in our mind, which is going to allow us to do what we need to do to keep staying steady on this path. It's just going to be about staying consistent at that point. So July 11th, with that same 3.2 million, it's about to look sick. And this is how you get billionaires, right? So you got 1, 2, 3, 4, 5, 6, $263,074,589. If you hit the nail on the head every single day. 263 million from $500. So it's like, okay, when you look at that and you say it could be 260 or 300,000, 300,000 doesn't sound so crazy. And it's right. This is the numbers this is actually really exciting. I'm so glad I did that. I've never actually gone through with it like that. $260 million. So that's exciting, right? So then you get into the account, you get to taking the trades, and then you get to looking at your strategies, and you see all your confirmations, or you see one, and you get excited because you're like, I just jumped in the compound plan. I'm 10 days ahead. I'm about to have 260 million in 4 months now. Like, you're just so excited. And then you the very next day, you're like, all right, it's about to reverse. I'm going to take the trade. I got one confirmation, but I already know what's happening because I'm a guru now. I done smacked the market already. I'm ready. So then you get in that shit and it hits your stop loss, but you're like, it hit my stop loss for proper risk. I'm not even mad. I'm just going to get back in because I really know it's going back, but it's just not ready yet. the shit consolidate. You do it all day. You do it tomorrow. You catch another trade. You lose another 10. You look up. You're down $50 from where you started. You start to fall into the second phase we call disappointment. The second phase is disappointment because it hits. It hits because it's like it could be the one time you did a 0.03 and you knew it was going to smack and you woke up and you didn't do a stop loss. Or it could be the one time you thought you was trading a mini, but you wasn't, and you just got in the trade to see, and then you look and your stop loss got hit and you wasn't mad, but then you looked and it was actually divvied your account because you thought it wasn't even going to be that pitch. Or whatever it was. Or you got a trade signal, they hit 10 trades in a row, I'm gonna put this one in my live, and that's the one that hit stop loss. And they talking about if you secured your profits at TP1, you was waiting on TP2, and now you done lost $200. And it's like disappointment. Now we mad. And it's like, I don't know where they are. Can you look in there? Hold on. I gotta find my keys. Hold on.
No worries.
We back.
Yes, sir.
So disappointment. I got to get through these kind of quickly too, because I really want to get into some of those pops and stuff. But with the disappointment phase, you just really realizing that, you know, that that you do take losses, and this is why proper risk is going to get you through that disappointment a lot. But after disappointment, you run into the phase of the quitter keep going, or the right or left. That's that. Do I really want to do this trading shit, or am I okay with my profession or what I'm doing? Like, does it really matter? Is this a game? Like, is this a fool's gold having me spend my gears with these charts that aren't real? Or is this something I can actually retire myself? Can my kids actually pay themselves? Is this a way for them to get their own allowance? Like, is this real or not? And it's like, I feel like I got right when a lot of people left. That's why I call it the right or left phase. And when you get through this quitter keep going phase, what you come into is the I got this phase. And that's the feeling where you start to get a sense of euphoria while you're looking at the charts. You recognize that there are other things that can happen. There are probabilities that come into account, but it's highly probable that once price gets here, it might come back down to here. And when you start to get into this I got this phase, you start to build a different level of confidence when you're entering the market, exiting the market, taking your trades. And the more we cycle through these 1 through 4 phases, this excitement, disappointment, quitter keep going, then I got this, is where we end up at this financial freedom phase where we're taking one trade and making $162,000 per day. And that's financial freedom, honestly. And this is where you can honestly do, I mean, we already can do an unlimited amount of things, but that's where we want to go. And the key to getting through these phases the quickest is going to be education, right? Education is the #1 key to getting through these phases. Now, after we understand the phases of trading, recognizing that we're going to go through some of these things, what are some of the pitfalls that we can avoid in order to just keep ourselves on a steady journey, on a steady trip? And one of the main things that I realized that's a problem for pretty much every trader is going to be FOMO and revenge trading. FOMO and revenge trading. It's feeling like you're missing out on an idea and then trying to get the idea back, trying to really get that idea going, or trying to make some money back that you lost. And I've come to look at the trading like an analogy and really draw this picture in my mind so that I don't have FOMO or I don't revenge trade. So it's like, I look at money like as if it was water in the ocean, right? And it's just forever flowing out, forever coming back. Hurricanes, I got to do this quick, but hurricanes, essentially, I was looking at this news story and it was hot water, right? And it's cold air. And so the water starts to evaporate and the air picks the hot water up, brings it into the cold air, forms storm clouds. does that cycle over and over, brings it into the land and rains on the land, right? And then the water eventually finds its way back to the ocean, does the cycle again. It's a precipitation cycle. I realized water isn't necessarily lost, it's just transferred. And that's kind of how wealth works if you're doing it the right way. It's just a cycle, it's a transfer. And so as I was thinking about this, and this is where the analogy comes in, we got to get a little science fiction with it. You got to really paint the picture in your mind. I was like, okay, if the ocean is like water, is like money, let's say my trading account is like a boat. And it's like, I got these buckets on this boat. And the idea of it is to take this bucket, get some of this water, which is the money, putting it back to my boat, which will allow me to have a bigger boat, which will allow me to get a bigger bucket to get more of that money onto my boat. And then to do it in a way of which that I don't end up drowning my boat by going for too much. Because if you do go for too much at once, your boat will sink. And that's the whole concept where I started to look at it like that. And I was like, okay, so just because I see somebody else with a bigger boat and bigger buckets, and they're getting a lot more than I am at once, doesn't mean it's time for me to overload my boat and sink my shit. Now I gotta start from scratch again. Or just because them in their mind, and the thing about water is it's always there. And when you're looking at it like you're in an ocean and trading, it's a $7.7 trillion market. And prices always moving. Always moving. There's always buys, there's always sells. Yesterday, price bought all the way up to a point. So I mean, today it sold all the way down to a point. Tomorrow it's going to buy all the way up to a point and then sell back down all the way to a point. And all of this is money being made. And if you think about it like that, and that's just the ocean's tides going back and forth, and you can put your bucket in there at any time. There's no point in feeling any pressure as if you have to do it at one point in time because it's always there. You can relax and just say, okay, well, I'm gonna put my bucket in the water today. Or maybe I'm not today. Maybe I don't want to put it in the bucket. Maybe it's too stormy this week and I don't want to put my bucket in the water at all this week. But then that one day where it's easy clouds and I can clearly see what's down there, I'm gonna just get what I want. And then that's all I'm gonna do. And it's like when you realize that that's the kind of control you have, that it's not the market controlling you, but it's you controlling you, then it's just a whole nother sense of peace. And then you see other people decide, okay, guys, I'm about to put my bucket in the water. That no longer makes you feel like, okay, I have to too. Oh, everybody's getting their buckets ready. Let me get mine. And that's like, no, you don't have to, because you'll know when it's time. And so that just allowed me to really just not have, I didn't feel like I was missing out anymore, because I realized now that it's always, just like I saw so many ideas last week, I caught another idea yesterday, so many new ideas tomorrow, and it's always movement every time. So it's no missing out. And then I don't have to go back and try to make it back, because the thing about revenge trading is it's going to stop you from compounding when all you had to do was stop. Just let the storm pass, come back, you still have your boat. But it's like if you risk the whole boat over this one bucket of water and then the storm wash you up, you got to start all over from scratch over one bucket of water when you could have just waited. And that's real. And so that's real as hell. And so then we get into proper risk. And so how then do we have proper risk? And just some simple numbers that I've realized that I've always taken into account. Lee Allen says if you only risk a 0.05%, you'll never blow your account. Now that's crazy, honestly. And that means that if you hit a 0.05% loss, you stop for the day. And then you can get into risk to reward. But that's just Lee Allen's official, what she said on her training videos. Now, I've gone through a lot of different proper risk training. Some people say 10% is their max risk loss. If I lose 10% in a day, I'm going to stop. If you do the numbers, 10% per day means 10 days of losses and your account is blown. I didn't really like those numbers. I did a lot of back testing doing HFX. Some was doing 7% per day. 5% was getting a little more of what I liked. Nowadays, I'm feeling like 2% loss. It's time to stop. That's sort of what I've been rolling with. On my compound journeys, whenever I get outside of that 2%, it's always led to shipwreck. I'm not gonna lie. Anything over 2%, you start to get comfortable losing that, I realize it's like shipwreck. But if you stop at 2, and if you have a 5% gain, which essentially is a little bit more than a 1-to-2 ratio, if you think about it, you're risking 2% to gain 5%. It's a little bit more than 1-to-2. It's a 2.5% gain actually. Then we're looking good. And so that's just sort of my rule of thumb, 2% loss, which means you have to calculate your stop loss with your account size to make sure that if the storm starts to wash up too much, you get on up out of there and you wait till tomorrow. Even if the trade ends up going your way, just write it down, count up why you got in too early. I should have got, and what I realized is that just means I have to be extra patient. And if I see an invalidation level, I have to put my entry closer to that level so that my stop can account for my 2%. That means I can't do all of this, like this is my entry and this is my stop, when this is really my 2%. And that's something that we just have to know as traders. What is our percents? Let me get back to my notes, and I have notes. So pip calculation is very important on your pairs. You know, you got to know minor, you got to know what mini, standards, and micro lots. 0.01, 10 cents per pip, right? No, 0.01, yeah, 10 cents per pip, $1 per pip, $10 per pip. Okay, so we know that. You use that in confluence with risk to reward. Now let me see if I have this risk to reward chart I can show and why it is important. Images. Risk to reward. Give me my good ones. Yes. Here's why. I really just want to show you this picture, but it's just not blowing up like I want it to be, but it's cool. It doesn't matter. We can still see it. We know what we're looking at. So let me share my screen. Come on, Zoom, work with me, baby. This is why risk to reward is important. Okay. Boom. Screen shared. If you have a one-to-one, you essentially have to, your break even is 50%. So if you only use a one-to-one risk to reward, you have to at least win half of your trades in order to break even. If you have a 2-to-1, you only need to win 40% of your trades to be profitable. 3-to-1, meaning I'm risking $10 on my trade, but my TP is going to be $30 every single time. You only need to win 30% of your trades to be profitable. Again, 4-to-1, your break even at 20% of your trades. So if you take 5 trades and you only win 1, but all of your trades were a 4-to-1 ratio, then boom, that one TP smack, you're at break even. The next TP smack, you're way profitable. And it's like 5-to-1 is even better, because honestly, it just gets better. And so it's like just showing this to show, having that pit calculation, having that patience to wait for the move, and having that proper risk and the right risk to reward is almost all you really need in these markets. That's it. Look at that. You look at the levels and it doesn't take much. So we're going to move forward. We're moving forward kind of fast. This is a little bit advanced. And now that I'm doing this, I'm realizing I'm going to need to split this up next time into multiple days so I can really take my time. We're going to move into the charts now. And what we're going to look at is, let me just get everything set up for this particular call. What we're going to look at today is just what to do when you're red, what to do when you're blue. What are some of these methods? And then that's going to be it for this #1 proper risk management call today. So let's go here. Let's go ahead and take all of these off here. You got any questions so far?
No question, man. I just appreciate it.
I appreciate it as well. So boom. Just for the sake of this being a basics call, I took everything off the chart. We're just gonna look at some ideas. We're just gonna look at this. Share screen. Cool. So when you get into a trade, there's things that happen in your MT4 where you call it, oh, this is perfect. This is actually perfect right here. This was an idea I was looking at with somebody else on a call. We were looking at potential buys. And we had 3 different potential setups that we were going to go off of. And I told him, based on risk to reward, we're going to have to open up our stop loss if we want to get to certain points in the market. when we were actually looking at it, and this is why it's perfect, because we were actually looking at it right here. No, because price was here. This was our entry. So let me go ahead and play it till price gets down there, because it was a drop candle. And then it started buying. I think this was the candle. Yeah, so this was the candle where I had got in, and then it started coming down, and I was just a little bit worried. I'm sorry, let me just let it play out a little bit. There we go. Yo, so here we go. So we were looking at this on SPX. We were saying, okay, we got potential buy. I really just wanted to put my stop loss under this wick, right? Then I was looking at the levels. There was a couple different things I was looking at. I realized that if I want to get this TP up here, I'm going to have to loosen up my stops. And so boom, boom, boom. We came up with 3 different ideas. Now, thank you, sir. What do we do when we enter the trade? Because we are going to enter trades, and it's going to immediately go red like this. Like it literally, I mean, it went blue for a little bit, then it came back down. This is red. Now on your MT4, it will look very red, right? Now this first trade stop loss is going to get hit. Second trade stop loss is going to get hit. But let's just imagine that our stop loss was here the whole time, okay? Just for the sake of this. And let's just imagine that we did not over leverage. Now the first key to success is going to be to enter light. Enter light. That's like first step is enter light. And it sounds so simple, but we got to make sure to think about that, because if we're willing to risk a 0.05, that's what we're going to work with right now. Let's say we have $1,000 in our account. We're willing to risk a 0.05, 10 minutes. We can get through this. Then we have to enter with a 0.02 or less if we're going to do with a 0.05. So our first 0.02 is here, 0.02. Okay. Now the trade starts to play out. We got very red right here. I'm not gonna lie. Now I should have slowed it down, because our first 0.02 would be here. Then as the trade starts to get more red, but not invalidated, we're gonna go ahead and enter again. On a 0.01 this time, keeping in mind that we still have one more 0.02 in the chamber, because we're willing to risk a 0.05. We go in profit, price comes back down. Look at this. I think it's just going to shoot. So we only got a 0.03 in. TP smacked. It never came back down. This one pullback was our opportunity to pop. And then boom. Now, if price would have came back down, we could have got in with another 0.02. As long as our stop loss didn't get hit, TP gets smacked. Now, here's the thing. If you get in with the 0.05 right here, and let's just do this. This is very important. I wasn't going to do it, but we got to do it. So let's just go into our measurements. Can I get my measurements tool? From entry to stop loss, this was, what is that, 31 points? So 105 at 30 points, that's 5 times 3 is $150. If you would have just did a 0.05, okay, that's 150. Now, this from a 0.02 to stop loss, that's 60 bucks. Then the 0.01 from here, so that's 60 plus 0.01 to here is 19. Now you're looking at $80 risk. So let's just say, because this trade, we only got a 0.03 off, I'm going to make this a lot more clear for us. So right now, we had at risk a 0.02, which we already established was $60, and then another 0.01, which we just established was $20. So that's $80 at risk with this method versus the 0.03 from here. That $80 versus a point, it would have been $90. We saved $10 by taking our 0.01 down here, 10 pips less. And then we now profited more, $10 more than we would have if we would have had our TP, because now one trade's coming from here and our second trade is going from there. Does that make sense? So you're increasing your profit and decreasing the risk just by relaxing. And that's the first step, is when you're in red is to relax, take a deep breath. The second step is to pop. Where can I find my second entry as long as the invalidation doesn't get hit? That's why we entered late. The third step, because price will start to move, right? What do we do as price starts to get more and more blue? Let's see, how much time do we have left? 6 minutes. Let's get it. We're moving now. This red line is going to be our stop loss. Let me zoom out so I can really see it. We're going to make this red. I didn't get red at all. Let's go. Stop loss. This is good. So back here, that was our invalidation level, right? Now, depending on your risk management, you might have had to wait for price to get closer. You might not have never caught the trade. You might have to rechange your stop loss. This is just the trade we saw. So let's rock with it. Now, right as price, boom, we got our pop, boom. As price starts to clear levels, we are now moving our stop loss. From there, our first trade is now risk-free. Our pop is risk-free. Our pop is actually in profit. And now, because price has cleared these levels, if it comes back to clear these risks, we're gonna put our stop right here, then we know that, you know, this trade is gonna tank and we should have gotten a sell right here. So we be patient, boom. Now, after this bullish candle, we got some more price action. We're gonna now move our stop again, right under these wicks. And now we have two trades with how much profit no matter what happens. We've got 30 bucks on 30 bucks on our, and go ahead and mute yourself, Lion, if you don't mind. 30 bucks on our first entry, 40 bucks on our second entry, because that's the 0.02. That is 30 and 40 is $70 in the pocket, no matter what. And then all we have to do is just wait and see what happens next, which is a TP smack. Ultimately, just leaving our stop loss in profit. We can even move our stop up after every candle, because this was such a strong bullish push. It never even came down until TP was smacked at ultimately 100 points, which was at that 0.02, 400, 0.01, a little bit more than 100, looking at, you know, $500 move on a 0.03. And it's like, that's not bad. And all we did, again, the keys here was, when it's red, we pop, we breathe, we pop. When it's blue, for when it's on you, you can pull your profits at any time. But in reality, you want to move your stop to B, which is break even. And then you want to start to take partials. So another thing to do, guys, is as these TPs get hit, remove your risk completely. You don't have to leave the full 0.02 in. You can take this 0.02 up to here, change that 0.02 to a 0.01, and you've secured yourself. How much time do we have? 3 minutes. Perfect. So we can talk about partials. That 0.01 is still 67 bucks. So you have another 0.01 running, a 0.01 lower, and a 0.02 already secured. That's called taking partials. We had to talk about taking partials. And the idea of having two entries, what another thing you could have done is, instead of doing a full 0.02 here, what we could have done is a 0.01, and I'm just going to make the second line blue so we can notice the exact same entry. We could have just popped we'll make it 1 point and blue, and text is blue. We're just going to do 0.01 again. And you could have just did a twin traded 0.01 and left both entries in place of your 0.02, close the 0.01. Now you got three entries, 3 0.01s running instead of 1.03. These are all just little things we can do to manipulate our trades so that we are now taking, and it's just, we're just splitting our buckets up so we can get more water at once and risk less of our boat and continue to win. And so these are the concepts I just wanted to go over today. just some basic risk management, some basic mindset, and understanding what we're working with, understanding that no matter what strategy we use, if we don't stop when it's time to stop, and if we don't go when it's time to go and have the confidence to go and just allow it to be what it's going to be, then we'll forever be stuck in this area, not going anywhere, not allowing ourselves to see what our true maximum potential is because we didn't do anything. And so we have to have proper risk. We have to understand the phases of trading, and we have to, no matter what, show gratitude after every single trading session. Just be thankful because there's another opportunity at the end of the day.